All right, what's up, Tycoon? Super excited for today's video. We're going to be looking at DDD. All right, this is 3D Systems Inc. This is a 3D printing company, and I suggest doing some more research on them and whether or not you want to put them in one of your top 3D printing companies for the future. Okay, it's a really innovative field, and there's a really lots of potential in the future for growth in a lot of these companies. Okay, so you would be investing in a growth company, something like that. Okay, now full transparency, I currently don't own any shares of Triple D. Not trying to pump them in any way or shill them on you guys, but just give you guys a nice, honest, unbiased technical analysis. And I do viewer requests every single week. So if you want to see your stock in the next video, make sure to comment below. All right. Um, if you watched my last breakdown of DDD, all right, I essentially went over, some of the like support levels, this chart pattern here, how if we broke down from this, most likely there was a potential that we could hit this weekly demand zone. All right. Now, lo and behold, after hitting highs of 56.5, all right, we came down and hit, lows right around 850, and we found some demand in here in this demand zone. Okay. All right, so we had this symmetrical triangle pattern here, which a lot of people, especially beginners, mistake for a bullish pattern. All right, it's not bullish or bearish. It's unbiased, all right? And so what you do is you play for the breakout to the upside, or you play for the breakout to the downside. And we broke to the downside on this one, all right? And we've fallen a lot into this very large weekly demand zone. The reason that this is real prevalent is because this is before all of the 2020, massive stimulus money came in, and every single stock that you could think of was just skyrocketing, right? That's not what the case was, or that's what the case was, is everything was skyrocketing. So we really had to come back and test these previous levels from the previous years before, okay, in between $12 down to $4.06. And this was my, demand zone that I was really looking at to see. Okay, so now that we've broken it down on a larger time frame, such as the weekly, we'll zoom into the daily chart now. All right, and it can kind of see it a little bit clearer. All right, this shows the past 1 year of data, all each candlestick represented by representing 1 day in the market. All right, now if you watch my videos a lot, you know that I love to cover gaps up on the chart. We have two very nice gaps up, one from 32 to 38, about 32 to 33, and we have one from 26 to 27.5. These gaps fill in the stock market about 90 to 95% of the time historically, right? The main question is when, right? So you have to think like, well, we're in a bear market right now. There's all this recession fear and all this. We're not currently in a bull market cycle where growth and tech growth companies are going to be in a massive bull cycle, right? These are companies that investors are taking some of their money from, and putting it in much less speculative and safer place, right? But what we're starting to see on, some technical analysis wise, is some really nice bullish divergence that had a really nice pop. And again, we can look in that demand zone. We came in that demand zone, we consolidated, and there's a potential that we could be finding the demand we need to start a short-term reversal, if not maybe a much longer-term reversal. Okay, there's three stages to a reversal. There's your downtrend, then there's your consolidation phase where you trade sideways, and then there's your uptrend. We clearly have the downtrend in the consolidation phase. All right, we'll zoom in a little bit more and I'll highlight to you guys the bullish divergence that I'm speaking of. Okay, we'll pull up our RSI a little bit more, and this is the relative strength index. All right, so what you can do is you can look and actually see when the stock price is actually making lower lows. Okay, like we have a low here. Okay, this lines up with our low on our RSI. All right, and we look in the future, we create a lower low. Okay, so we have a low and then a lower low, but we actually have a low and a higher low on our RSI. Okay, that's what's known as bullish divergence. All right, this is an indicator that traders use, such as myself and other, experienced traders. This is one of the things that we look up for a potential setup for a swing trade or a day trade, right? When you're looking on the daily chart and you're seeing that, the price action is heading lower, the stock's making lower lows, but the relative strength is actually increasing, you can look to try to catch the bounces off of that trend line now, right? So we can look here and see that we had a low and a lower low initially, right? But what happened? We still went lower on the RSI. there's no bullish divergence there, right? Now we did, hit the bottom of our demand zone. So if you're playing the demand strategy, right, you want to enter at the bottom of demand and have a stop loss shortly outside of your demand, to cut your losses and then ride the momentum up to the top of demand. That perfectly happened. Okay, so the demand zone seems to be playing out, but there was no bullish divergence at first, right? And what did we do? We ended up coming back down and testing this demand zone again, and that's when we made our lower low. Okay, because this is our initial low on the RSI. This is low. This is our low point right here. Okay, right there at 25. All right, then we went lower on the stock price, longer in time, and we went much higher on the RSI right here. So now you can draw your trend line from here to here. Okay, from this point, and that's where you first see your bullish divergence, and you can choose to enter into it and see if we get a pop off of that bullish divergence, or you can be patient, right, and wait for us to run up. All right, keep that trend line there and wait for the next time that we hit it. Okay, and the next time that we hit that bullish divergence, you can enter in on a day trade or swing trade in hopes that we may see some bullish momentum, all right, in the short term future. Now it's not 100% guaranteed, but it is, something that people use to, make their trades, more successful, right? Because nothing's 100% guaranteed. If it was, everybody would be billionaires and we all would be trading stocks 24/7, making as much money as we wanted, right? But you can add tools to your disposal, right? And this is one of the easiest tools, in my opinion, to start off with as a beginner, which is why I'm showing it, right? It's very easy to be able to spot lower lows and be able to spot higher lows on the RSI, right? Again, it's not perfect, but it does provide good opportunities for a day trade or swing trade, right? If you enter in on the dips here, all right, you enter in on the dip here at 922, it comes up to 10.11, right? That's about $1 gain per share that you own. If you own 1,000 shares, you just made $100. If you're trading options, then that could be a much larger gain, right? Depending on if you're trading weekly options, monthly options, quarterly, or something, a year more out, like a leap. Okay, but you can come in here, and each time that now that you have that trend line, you say, okay, boom, well, we bounced here. We bounced here, so now that's 2 times that we bounced there. Let me look to catch the next bounce there, right? And you can enter right when we come along that trend line, and you can basically say, well, if we break it and we start trading below it, then the trend line is broken, the bullish divergence is broken, and it's no longer valid. But if you enter in here, right along the line, it gives you a really good risk to reward ratio, right? Because you're risking very little, playing it to the downside, and that we keep bouncing off of there, and that patterns in the stock market tend to repeat themselves. They don't have to repeat themselves. They never are guaranteed, but they tend to repeat themselves. So if you can spot patterns and spot bullish divergence across the market, then it'll give you a much better edge in the market. And that's how you really improve, and can grow a small account into a large account. Or if you have a very large account, that's how you can consistently get profits, right? Because the worst thing to do is, when you grow a small account to a large account, is to start, YOLOing a bunch of money around the market. Because now, well, hey, I was able to make all this money, and honestly, you might have gotten lucky on a few trades and hit a couple home runs, but can you consistently do that over and over again, right? That's one of the biggest challenges with trading with a large account, where you're trying to actually make some income out of there, is how can you consistently make enough money to withdraw out of there, and actually pay yourself and give yourself some profits, right? And this is one of my favorite ways to do it. And if you really enjoyed this video, I just appreciate if you would like, subscribe, and don't forget to comment what stock you want to see in the next video. Okay, let me know in the comments below.